Welcome to the Fractional Podcast, where we share real stories of operators raising capital and partnering with everyday investors to bring big ideas to life. I'm your host, Stella Hahn, and each week we dive into how dealmakers and communities are using the Fractional platform to build wealth together. Today, we have Shawn McArthur, who's recently raised close to $600,000 for two multifamily projects. Shawn, thanks so much for coming on. Would love for you to tell the audience a little bit more about your real estate investing journey and these two projects that you've done.
Awesome. Really excited for being here. Thank you so much for having me. We've loved Fractional and excited to dive into this. So I've been investing in real estate for probably 3 years now. I got out of the military in 2022. I was active duty Army and then just kind of fell in love with the real estate investing world. Started some different courses, then got involved with Subject 2, Paces Community Sub 2, Gator, and now Owners Club, and just really been diving into it from there. I'm also a real estate agent full time as well. So fell in love with that world and then kind of decided to bridge the two to be able to help people to invest, which we found Fractional. And I remember the day it happened. I'm sure we'll talk more about it later. But the day we found it, I talked to my partner and I was like, this is it. This is exactly what we've been waiting for. And we took off very quickly from there, raising capital and closing a couple projects pretty quickly after we found the platform.
That's awesome. And the two multifamily deals, how did you come across those? Tell us more about those two deals.
Yeah, so the first one, actually, both were on market deals. We just found them and realized they were under rented and just people hadn't, I guess, seen the value there. So the very first one was right after we found Fractional. We've honestly been looking at multifamily for about a year and just we've been butting heads and trying to figure out how to raise capital. We had team members that really wanted to invest, but they weren't accredited. And we were just trying to figure out all these different ways of how to pool this money together. We didn't want to just use only our capital. We wanted to get people involved. And so we found a deal, didn't work out. Thank goodness, would have been terrible. And then we found this first one at Lake of the Ozarks, waterfront property, 12 units. I called the agent. As soon as I talked to him, he told me it was $200,000 overpriced. Pretty good deal. Got a $200,000 off literally the very first phone call without negotiating, which we thought was a great deal. Units were under rented by about $200 a unit. So since we've closed, we've actually already raised rents on almost every unit. 100% of the people, even though we raised them $150 to $200 a unit, no one's left yet. All 12 units 100% occupied just because they were that under rented. And it's been a great project and have an amazing relationship with the property manager now. And she actually just brought us a 72 unit that sellers are looking to sell that we may be bringing to Fractional here pretty soon. So
That's exciting. I love it. And what about the second one?
yeah, the second one was a 24 unit. We actually found, man, actually while we were still under contract on the Lake of the Ozarks one, so we actually started raising capital for that one at the same time. We did it a little bit differently. So the first one, which we're really proud of, was 100% real estate agents on our team. So we knew every single person. We only raised capital from our team, which was awesome. Everyone that actually invested was either their first deal, most of them were their first deal, or they'd maybe done one in their life. So it's really awesome to be able to help that many people get their first deal. And the second one, we decided to kind of expand that a little bit. We gave it to our team first, and then we had quite a few people from the Fractional Accelerate community that invested with us as well. And then we closed on that one. It was a great 24 unit deal, had laundry on site. We're already working on improving those rents, have a much better property manager in there, and that one's been going really well as well.
Amazing. Well, I'm personally an investor in the second deal, so it's been really great being a part of the rocket ship and doing it together. So thanks for having me personally a part of that crew. And I want to double click on what you said around the first deal where, the investors came from, agents in the brokerage. And that is, I think, just such an interesting piece to talk about because, one of the investors in Fractional is actually the National Association of Realtors. And one really big subject that we really resonated and connected on was how so many agents, they live and breathe real estate. They're always helping their clients buy, sell, invest, but very few agents themselves get the opportunity to buy investment properties and build generational wealth in this asset that they work in, every minute of the day, right? So maybe tell us a little bit more about how you involved, agents in the brokerage, the network. How did they see the opportunity and just unlocking all of that?
Yeah, I love this question. This is honestly what I'm most excited about. We love multifamily, and we've got a flipping business, so we flip a lot of houses. Really partial to veterans too, but also I've seen in this agent world of things, it's just this kind of this hamster wheel, and I see how hard agents work. I know there's a ton of agents out there that probably shouldn't have their license or that stick it out for 6 months and then they're gone. Like there's a lot of cycle, but I've also seen the ones that grind for years and years and they just are stuck in this sales cycle of being real estate adjacent. But I think Pace talks about it all the time of they're servicing real estate just like a notary would or a title company. Like they just service it, but they're not in real estate, even though they're literally giving investors deals. They're helping clients get equity. They're selling a home and telling everyone, hey, we helped this person make $100,000 in equity, and then they get their commission and on to the next one. So we've been super passionate about it. When I joined the team, I told Matt, my partner, that I was like, I want to invest. That's what I'm here to do. So we helped launch that company, and it was just really hard to get people involved in single family flips. Just no one really wants to do the work, and a lot of people just want to like. It's also hard to like get a ton of people on a flip. There's just so many parts to it. So we found multifamily. I was like, we can get a lot of people in here. We can teach them. There's enough roles in a large multifamily deal where people can help with the P&Ls and help check on the property. We can get people involved and teach them. And I've just seen that agents just are hesitant to invest in their first deal. Most of them don't want to spend $50,000 or go out and buy a rental that's all their commission income for an entire year for $200 a month. They don't want to go flip because if they flip and it goes badly, well, that can stop your entire investing career pretty quickly. I found that out the hard way as well. And so I kind of when I joined Owners Club this year, we talked a lot about our Mount Everest, and I've really found this to be my Mount Everest. I want to help 50,000 agents invest in their first deal or be able to invest in a multifamily. And I've really found that Fractional is an amazing platform to do it. And it's been so awesome too. Actually, other team leads and team leaders from other that we work with and my partner coaches with have been like, how do we bring this to our team? We want to get them involved and be partners with our team members. And so as we're launching these first ones, we're also now going to start helping other teams launch their fractional communities and be able to have their agents invest in their first deal, which I'm super excited about. And Fractional is an amazing platform for it.
Wow, that is honestly one of the best Mount Everest that I've heard. I think you're exactly right. Where like so many people are servicing real estate, but they're not actually in it. They're not growing their wealth. They don't own this asset, and something that is so obvious, right? It's like they're on just on the cuffs of it. How do we make that first step of ownership a lot easier? Which brings me to my next question is, I noticed for both of your raises, you and Matt had set the minimum to just $5,000. And, that is obviously the lowest that we go on fractional, but, we've also seen other operators choose something that's higher, 15, 25. I've even seen, 100K as the minimum sometimes. So, tell me a little bit more about the thought process of, choosing 5,000 as the minimum for both projects.
Yeah, and for us, that's a great point. I'm really glad you brought that up. So that's for us, the most important thing is be able to bring as many people onto these deals as we could. Both of these deals, actually, my partner Matt and I talked about. We're buying these deals whether anyone invests with us or not. Especially the first one, it was such a great deal. We're buying these deals, and what we wanted to do was to, as operators and investors, to lead the path for them and show them how this path goes, but tell them, hey, whether you invest or not, we're buying this deal. It's an amazing asset. We've got the capital. We're going to do it. We'd love to have as many of you on board with us as possible because we want to just show them what's possible, show them how to get out and build a legacy so that they don't have to sell real estate till they're 65. I'm sure a lot of people know that 65-year-old agent that's still literally having to sell real estate every day. They've probably done 800 transactions in their career, but they still have to sell and sell and sell because they've got absolutely no real estate, no investments. They've just been selling on to the next transaction. And so we really wanted to set that minimum low because honestly, almost every one of our investors, like that was a huge leap for them. And for some people, I talked to a few of them they said, man, I'm sorry, it's only $5,000. I know it's not much. And I just sat them down. I said, listen, this $5,000 to you might be what's up to someone else, their $500,000. Like your $5,000 investment means as much to us as someone who wants to come in and bring $1 million. Of course, we'd love someone to come bring $1 million to our deals. Like that'd be amazing. But we want to protect and we want to teach and help coach the people who invest the 5,000 along with someone who invests 250. There's no levels in our community of like, well, if you invest this, we'll teach you more stuff than someone else. Like we want everyone to be able to come in, learn, and just invest in their first deal. Like it's super awesome. And I love that Fractional has such a low starting because we can get so many more people with us. It's more work, I'll admit. We have to communicate with more people. But it's worth it because that's what our passion project is. It's aligned with my Mount Everest, and Fractional helps us to support that in the best way possible. So,
Yeah, well, thank you, Shawn, for really spearheading that moment and just, filling in such a big gap, especially, within the world of agents and, giving them an opportunity to earn and learn together with you, right? Like I think that is a huge value that, you're bringing into the whole ecosystem is, so many people try to learn things just, from reading or listening, but to actually have a seat at the table and actually learn by doing and, doing it with people that are experienced like yourself who have their back, right? And real estate gets pretty real sometimes, right? Like a lot of unexpected things happen and, just reading about something is totally different than actually experiencing it, having someone you can count on to navigate those scenarios together and come out of it even stronger. So I think that is just, so empowering what you're doing for the community. So really, props to you for doing that. And, something that, you mentioned earlier is one of the first deals you were looking at and potentially considering for fractional, right? That ended up being something that you turned away. And I'm sure that, that happens a lot. And from what I know, you and Matt have a very strict underwriting criteria and what you guys look for. So tell us more about that. Like what is a home run deal where you guys are like, absolutely, yes, let's do it. We want to put our own capital in. We're going to bring other partners versus, next.
yeah, and especially the market right now, it's really tough to find deals. Like capital, honestly, is somewhat more easy to find as long as you've got a really great vehicle because so many people want to put their money to work, but there's so many bad deals, especially now with interest rates. It is really tough to find a cash flowing asset unless you're paying all cash, which again is just a whole other ballpark. But if you're trying to get lending, interest rates, even on the commercial side, are brutal. So finding a really great asset that cash flows right now at 7% interest rates. So both of the deals we had 7% interest, but they still cash flowed 10% better cash flow. And so the really awesome piece is, well, what happens when rates go to 5% or 4%? Like how much does that cash flow increase? So if we can buy an amazing asset that cash flows today, it's a killer down the road. And so what we look for is number one thing is it cash flowing right now? Can we support this project if we don't have to underwrite it kind of crazy and kind of twist some numbers and go, well, if we increase every unit by $600 a month and we cut the expenses in half, which we've done a little bit on the flips, we've kind of stretched our numbers and gone outside our buy box, but we sat down and I've especially kind of felt the weight of it of, you know, allowing people and partnering with people to invest with us that was $5,000. We're really strict on our requirements because we know this could be their only investment. For some of us who invest a ton, we get it. Projects don't, sometimes they fail, sometimes they don't go to expectations. But someone who invests $5,000, that's their last six closings that they told their kids they were, hey, we're investing in our first deal. If this deal goes bad, they may never invest in real estate again. And I don't want to be the person that stops their this awesome future potential for their family and their legacy because we did a bad job underwriting. So we said no to probably 100 deals before we found these two, and I've probably underwritten three or four in the last week that didn't fit our criteria. They look decent. They might be great in 10 years, but right now, not so great. So we look for around 10% cash on cash is really what we're looking for. Multifamily. That's kind of our main buy box right now is just multifamily apartments. There's a lot of great RV parks out there and mobile home parks. It's not really our strong suit. So we're finding those for other people, maybe bird dogging and trying to partner with other people on those, but that's not our wheelhouse. So we're looking for strong multifamily, great locations, number one, like always, and then areas where we can add some value, but not have to put a ton of renovations in to add value, especially with the market right now. We just don't like the unknowns of construction costs and you got to renovate 50 units. How much reserves do we need? How much do we need for a rehab budget? So we like units where they're just under rented, not properly managed, and we can get that cash on cash at least 8% when we purchase, and we'd like to have it at 12 plus and within the first year. That's really our goal. And then what we're really looking for is 3 to 5 year exits. Potentially 3 years is kind of our main goal, but we underwrite them and tell people to expect 5 just in case, because who knows what rates are going to do. So
Wow, that is absolutely golden. And I relate so much, which is, why I believe in your model around finding something that works now, right? I think it's very scary to, look at an underwriting sheet and things look like absolute shit. And then there's this perfect rainbow looking pro forma that is supposed to just magically happen a year from now. And, for someone who's not a savvy investor, right? Like they might be getting sold on the dream that is, very impractical to actually hit. So, 100%, just resonates so much with your criteria where you want to look for something that at the bare minimum like already works well today and obviously has an even higher goal for what it could accomplish in the future. So that's amazing. And one thing we talked about is how on the second deal you brought on investors from the broader fractional community to outside of the brokerage. What do you feel like made them feel more trust in investing and doing a property with you? Because that's not something that, every operator accomplishes. A lot of people, are successful within their network, which is obviously great already. But I think it's an even greater accomplishment that you were able to attract other investors to want to work with you too. So what do you feel like was maybe, the light bulb moment for them to be like, wow, I want to partner with Shawn and do this together?
Yeah, so I think it's a couple things. One, going back to the pro forma thing, I think that's why it's so important to train agents because every pro forma I've got from an agent, I've thrown away immediately because they're terrible. Like they're absolutely like I've talked to property managers and the pro forma rents they have are literally impossible to ever get in that area. They're like, we can never rent it for that much ever. Like that's impossible. So we pretty much throw all those away. And so in our numbers, we pitch the deal. We help, like, we kind of go through like what our goals are with the deal, kind of walk people through to what they are right now. We like to hit on the upside, but what we want to do is partner with people who love the deal for what it is right now. And I think that's somewhat of what sets ours apart is we look for deals who can stand on their own feet right now. If we didn't do anything to this deal, would we be okay with how it's performing? Now, maybe it's not what we want. Maybe there's better deals in the world out there, and we're not going to keep it there. But can this thing stand on its own feet? Us not touch it and it do okay, even if rates go crazy, the real estate market does whatever. Can it stand on its own feet? And I think that's what set us apart a little bit. Which we've made the mistakes of swinging a little bit outside of our box, but for these multifamily, we've gotten really, really dialed in, and we'd rather say no to 100 deals and then find the one perfect gem than kind of go, well, we just want another deal right now, so let's just go ahead and get this one. I know it's only 3% cash on cash, but I'm sure we can turn it around. We're really great operators. I'm sure we can. And we can improve things, but, you know, no matter how great an operator you are in the world, you can't always overcome the market. And things unknown happen. Roofs leak, tenants leave, the market goes crazy, things happen. So you have to be able to underwrite them and find great assets that are work today and then work on the goal and help show people the vision of where you want it to be, but it's got to be a great asset right now, otherwise you can get yourself in trouble pretty quickly.
Yep. Been there, done that. There's definitely times where I'm like, man, I really want to hit this metric that I set for myself or number of deals I'm buying this quarter, and then you just force that one not so good cookie in, and it just ends up just creating a whole ton of chaos for you later. So definitely not worth it. Love the model that you have in terms of just finding the right one and focusing on that and having the best multiplier effect on the one that you're most bullish on.
Yeah, and that
And
reminded me too, real quick, as far as like those goals, I think they're really important, but we've kind of shifted ours a little bit, especially with how the market's so volatile. Of not how many units are we going to buy this quarter, but how many are we going to underwrite? And if they don't hit our criteria, we're not swinging no matter what. Like we've got, of course, goals of what we want to, units we want to be at, but we're kind of extending our time horizons now. And as long as we're hitting our goals of how many deals we're looking at, we're okay with that. The results will eventually come. Like these, we found these two within a month of each other, and we said no to probably 6 deals ahead of time. So we jumped way ahead of our unit goals for one quarter. We're behind where we want to be for the year, but we jumped ahead already in the quarter because we kept saying no and no and no and found the right one. So that's kind of how we've changed a little bit. So we're not swinging at those bad deals. We go as long as we're putting in the effort and the work and finding deals to underwrite. If they're not a great fit, they're not a great fit. So anyway, that just reminded me of that and wanted to bring that up.
no, that's incredible. I love the mindset shift on the metric. It's you're gearing it more on making sure that as an investor, as an operator, you're keeping the doors open. You're underwriting as much as you can so you don't miss out on those opportunities. Like, yeah, I love that. It's like that should be the metric rather than how many deals you're closing, because it doesn't matter. You just need just a couple of home runs, right, to make it count. So super, super appreciate that mindset shift. And as we're talking about timeline, earlier you said, thinking 3 to 5 years, right? Does that timeline, how do you think about that timeline? Does your mindset kind of change when you're thinking about buying properties with other investors through a capital raise versus just buying something for yourself?
Yeah, it's definitely different because with ourselves, we're looking for long term. I'll buy assets that I know what my personal goals are, and I know most of the time I'm going to keep this for 10 years unless something happens. But I want to be a lot more agile with my personal portfolio because I want to be able to support a great multifamily deal. I want to be able to go buy this business venture or buy a lawn care company or whatever. I want to be more agile with my personal portfolio. When you're bringing investors together, we've got to really have a long-term vision because everyone's got their own agenda and everyone's got what they want to do. They've, somebody that invests 50,000 has different goals than someone who wants to invest 5,000. And so what we have to really do is go, hey, this is the vision of this project. If it doesn't fit what you're looking for, awesome. We've got maybe some shorter term raises for you. So maybe some flips that'll be 6 months, which we're looking at maybe doing relatively soon. Maybe doing some shorter term, like investment club ones that are for flips for a year or 6 months or whatever, that we've seen people doing, and we may look at launching those just because we've got so many going on. And I know people want to learn those too. But as far as like looking out for that 3 to 5 years, we have to kind of underwrite the project. Our goal is three, be able to get people their money back, be able to refinance the deal, which is honestly mostly what we want to do is keep these deals, cash out refinance, take the tax-free money, be able to invest in another deal, get people their money back and to be able to invest hopefully with us in other deals. But we like to have that 5 year time horizon just because we don't know what the market's going to do. And so I've seen people, and we've even done it ourselves, like we know we can get out of this thing in 2 years, no problem. But when you sell that, if you don't get out of it in 2 years, I'd rather underpromise and overdeliver than the other way around because that's how people can get pretty frustrated. And if you're not communicating, you can really have some pretty serious discord within your community very quickly. But if we have to tell people a 5 year time horizon and then we hit all of our metrics and we exceed them in 3 years, let's go to a vote. Hey, which is amazing what Fractional can do. Let's go to a vote and say, hey, we had 130% return in 3 years. Are y'all ready to take these returns and go to other deals? And my bet is most people would say yes. And those that want to keep investing, awesome. We've got 6 more deals lined up. Let's go over here and look at this one, and kind of spread these returns around.
Absolutely. We just had another operator wrap up their current project and, also did, under deliver or under promise over deliver. And, they did that vote you talked about. It's like, hey, we got our profits back. It's going to be distributed. Who's ready for round two? And everyone commented, redeploy, redeploy, redeploy. Like, let's do it again, right? So that is the best type of energy to feel where, you come out of it, everyone won together and you're ready to just restart the cycle. So I'm definitely with you there. I'm curious, Shawn, were there any surprises or just things you didn't really expect, raising capital in this type of format?
Yeah, so it's been different, and the first deal compared to the second one were very different. And we wanted to push ourselves. Really, what we wanted to do is one, we want to be able to build a brand that people one trust us, and two, we don't want to be those sneaky people that come in town and we sell some snake oil and then we dip out when the market gets crazy and you don't see us again for 5 years. And then the market's crazy and now we have a new name and we're rebranded. We want to be here investing alongside people for a long time. And we'd love, honestly, for our investors and partners to just go, we'd love to just keep investing with you for 5, 10, 20 years. I mean, that would be amazing. We'd love to have long-term relationships with partners. And so what we did with those is between the first deal to the second one, the first one, everyone on that project knew us, liked us, and trust us. So they knew who we were, they knew how we operate. So we didn't really have to pitch ourselves. We didn't really have to go into our background as much. We just had to show amazing project, and they were on board. And mostly it was we had to get past their mindset issues because a lot of them just hadn't invested before. They wanted to, they just never could pull that trigger. And we were like, listen, let's just get a first deal, invest 5,000 minimum. You can always invest more later. It's not the last deal we'll have. Just get into it, get into real estate, and you'll find out very quickly if you like it or not. And so for the second one, a lot of the community didn't know who we were. They'd never seen us before. We're in the Fractional Accelerate community, but we had just joined that. Some of them are in Sub 2, some aren't. My partner Matt is not in any of those communities. He's only in the real estate investor community, so he didn't know anybody. So what we had to really do was, one, talk about who we are. And so our company, we've got a couple different offshoots of it, but changing lives investments is kind of our main thing. And so we called ourselves that because on the real estate team, we always talk about changing lives. We don't talk about how many homes we sold. We talk about how many families we've served, how many lives we've changed. That's all of our metrics around how many families did we serve, how many lives did we change, not how many homes did we sell. We've got metrics, of course, we want to hit, but the same thing on the investment side. So we had let's just call it changing lives investments and changing lives offers and changing lives XYZ, because that at the end of the day, that's our goal, to change our investors' lives, our partners' lives, but also to change the tenants' lives. Let's get them an amazing property manager. Let's give them great resources and be able to support them and actually get repairs done. Like, that's so crazy to me how many tenants there have repairs that they can't, their toilet isn't flushing and it's been leaking for 6 months and no one will fix it. Like, it's the craziest thing to me. I'm like, this is why you're paying rent. Yes, we're gonna improve your rent's probably gonna go up, but we're actually gonna come out and fix your stuff when it's broken. We're actually gonna give you a portal to log into to pay online. You don't have to drop check in a cash box and hope that somebody picks it up on time. And so we called ourselves that. So we kind of had to share our story about where we were, who we were, and then have an even better product and even better deal because they didn't really know who we were. So we had to kind of do that first, let them get to know us. Our first couple calls, I think we honestly barely talked about the deal. I think we mostly talked about who we were, what our goals were, and then we talked about the deal a little bit. And then our subsequent calls, since they kind of knew who we were, we started talking more and more about the deal, our past deals, one we just closed, and we kind of went from there. And as we keep growing outside of our normal community, we'll kind of keep that same model to be able to show people who we are first, who are you investing with, who you're partnering with, and then here's the deal. The deal's amazing. That can sell itself, but who are we that's helping operate this deal? Because at the end of the day, that's who you're partnering with. So you don't want to partner with someone. The deal could be the best thing in the world, but if you have a Ferrari, but you've got a 14-year-old driver that doesn't have a license, that Ferrari's not really much good to you. So
100%, 100%. Always the jockey and not the horse, right? And I love the changing lives name. Like, just hearing you say that, it is so empowering. Like, I literally felt a wave, in my heart, like hearing you say that. And I think, that's the reason why, people want to work with you and, believe in your mission, right? Because of just how genuine and how impact driven you are. Like, that is, incredible. And I think, even with your first raise, like seeing all the agents, people from your network jump onto that is just, I think a huge mic drop to the broader community where it's like, hey, this is people in my network who believe in me, who want to do business with me. That's why they jumped onto this thing. Like, that gives me as an investor so much more conviction where I trust you more as a business partner. I want to do something with you and bring you on as a partner. So I feel like, you completely understand, what's the best way to go about business. It's actually driving impact. It's about the personal relationships. It's about delivering real value. And then obviously, the deal speaks for itself, as you said. And, that is, I think, the secondary thing that comes after, working with such an awesome person and an investor like yourself.
yeah, and it's been amazing to kind of show that. And that's honestly one of the things that drew us to Fractional as well. I mean, if I can talk about that for a minute, it was, of course, the vehicle. I mean, the vehicle is amazing, the model is amazing, but also it's the team. It's that you'll jump on a call with us and we have questions about, we jumped on a call recently. We had just had some questions that we want to get because we want to make sure, again, we're protected, but that all of our investors are protected. And what happens if, Susie wants out of the deal? And what happens if Jimmy has some issues and questions? And how do we do that? And you're like, cool, no problem, Kyle. He's been amazing. He's probably answered way more questions than he should have. Like, I don't know if he gets paid overtime, but like, he's definitely worked overtime hours. Like, he's been amazing. And you jumped on calls with us. You invested alongside us. And we realized that the partnership on that aspect too, of like having someone who founded the product but is in the product, who's working with it, we've got questions, we can email you. I met you in person, we've talked. Like, you're doing the thing, not just having the product like, all right, this is an amazing product, I did it, like, see y'all later, hope this goes well. We're able to work alongside you, and that's been a huge benefit to us to go, all right, this is the vehicle that we want to work with, we want to invest in, because we know that y'all are improving and always, staying cutting edge of everything with the technology, but also with rules and regulations and the SEC and all that stuff. And you've got an amazing team that can help and calm our questions and fears, but also our investors. They'll jump on a call with us and go, "Hey, here's what's going on. Everybody relax. It's going to be okay. We've got the platform. They'll find the deal. We've got the platform. We'll help with bookkeeping. We'll handle this and we'll kind of call it, we got you." And that's been an amazing thing for us. And it's what's enabled us to go out and find more deals because we go, finally, we've got the backbone and the support to go, we can find a deal. How are we going to raise the capital? How do we find the bookkeeper? And how do we know people's money is safe? And we go, we got it. Let's just find the deals and Fractional will help us take care of the rest.
Yeah, we got each other. That's what we're here for is, we want to empower operators like yourself to focus on more on what you love, which is, actually operating and collaborating with your investors, which you're obviously doing a phenomenal job of. And, we want to be that backbone and infrastructure to really uplift everything else that is boring, but obviously critical, legal, compliance, back office, all of that, right? So, it's you need the dream team to make things happen. And, I definitely feel like we've got that here. Last question for you, Shawn.
Yeah.
I know Q3 is coming up. What are, some of your personal goals, in real estate and outside of it?
Man, that's such a great question. It's been such a journey, and we've been adding a lot more things we wanted to do because we're kind of hitting some of our goals quicker than we thought. And so we're like, well, what's next? What's next? I'm kind of I do a lot of the operations. I operate the multifamily and the flips, but I'm more of kind of a visionary mindset. So it's been trying to find like an integrator. I can operate the deals, but as far as spreadsheets and that stuff, like it's not always my strong suit and systems. So we've been working on finding, VAs and integrators to kind of help us get this, which is what Fractionals help with a lot is how to help us with the back end stuff that we're not as great at because we've got so much stuff going on and deals we're building. So yeah, Q3 and on. I've joined Owners Club this year, so it's been really building out that Mount Everest and partnering with more people. That's been the number one thing is how can I give back more and then be able to kind of help people do similar things that we're doing and work with them, solve issues they're having in their business as we're working and scaling and growing ours. Well, why don't we do this together? Why don't we work together and we can help each other hit our goals versus us just being, so focused we forget to look up and help the person to our left and our right, hit their goals. So we're planning to launch pretty soon is some smaller communities to help people do this exact thing we've been talking about. So we're going to launch some coaching, just some free communities to be able to help people launch their fractional community, especially real estate agents who want to invest in deals. Just show them enough of like what does this look like? What is some of the terminology? And then be able to help team leaders go, well, how do we bring this to our team? Cool, awesome. Let's connect you with Fractional. Let's get you a community set up. Here's how we set up our community. Here's ways to communicate. And that we can kind of help coach on the back end. And then people either one of two things, realize they want to do it themselves. Awesome. Let's partner together. Let's do this in other markets. Or two, they'll go, not my superpower. I don't want to do all this. We just invest with you? Awesome. Then we can raise more capital that way and be able to, do more deals, go to new markets. That's another goal we have, just to find some new markets and keep growing from there. So
That is amazing. And again, I think it's just incredible that you're really spearheading this initiative across, the whole agent ecosystem and, empowering them to actually take the first steps into investing and building generational wealth and doing it in such a collaborative way. So I'm honestly very honored and humbled to, be able to play a role in that. So keep doing that, super excited to, see you keep climbing that Mount Everest of yours. It is truly incredible. And for everyone listening, where can they find you if they want to stay in touch?
yeah, you can find me on Instagram at the Shawn McArthur. Join us on Fractional. It's at the Shawn McArthur there as well, and love to show you our community. It's of course we like to put lots of educational content there, whether you invest or not. Just we'd love to connect with you there, and feel free to ask me questions. I'd like to go over stuff. I love talking about real estate. You can tell I get excited about it and just love talking about it all day. So that's all I do, literally talk about real estate. So feel free to connect with me, and would love to go over anything that I can help you with. So.
Incredible. Well, thank you so much, Shawn, for coming on, and for everyone listening, thanks for tuning in, and we'll see you in the next one.
Thanks so much, Stella.